If you've ever wondered to understand how people actually make money in trading, then you are in the right place. Today, I'm going to break down a few but simple beginners friendly concepts that everyone can start using, even if you are new to the market. We will first discuss how the market operates, how to identify trends, how support and resistance levels work, and how beginners can spot trading opportunities in a straightforward manner. By the end of this video, you will have a clear idea of how to start trading with confidence. The forex market moves based on global events, and this is something most beginners don't realize. The price of a currency, like this one here, doesn't change randomly. It moves in response to factors such as central bank announcements, inflation rates, consumer price index or CPI reports, interest rates changes, and general economic data. For example, when the US releases the non-farm payroll report, the US dollar pairs such as the euro versus the US dollar, the Great British pound versus the US dollar versus the Japanese yen, and others can move hundreds of pips. The same applies to CPI inflation data, as well as when the European Central Bank or Bank of England reports their interest rates for the month. Beginners should focus on one or two major events per week. Don't chase every candle, just pick the important events. First thing to learn is when the big news comes out, it creates a lot of volatility, and volatility creates trading opportunities. One of the easiest ways to trade is simply to follow the trend. Look at the price here. If the market is making these higher highs and higher lows, that tells you buyers are in control. That's upward momentum. And in an uptrend, the simplest way is look for buying opportunities. On the other hand, if the market is making lower lows and lower highs, sellers are in control, which means the trend is down. Think of it like this. When you see the market going up, making higher highs, followed by a pullback like this, another high, a new pullback, that's your signal to follow the uptrend. Many beginners lose money simply because they try to fight the uptrend. They see the price is going up and they try to sell it here, they try to sell it here, they try to get their chance and enter again here, another setup there, and they end up losing all this time. The reason they do that is because they think that the price every time goes up, it went far away and it has to reverse and come down. However, in the market, the strongest moves typically persist and momentum tends to stay in the same direction until something big changes. So, keep it simple. First, identify the trend, and second, trade in the same direction. Support and resistance are the most basic but also the most powerful tools. Support is a level where the price tends to bounce up. Think of it like a floor where buyers simply step in. Resistance, on the other hand, is a level where the price tends to reject downward, almost like a ceiling where sellers push it lower. You will notice these levels all the time because price reacts to them again and again. Beginners don't need complicated indicators. Just draw simple horizontal lines where the market bounces or where the market reverses. For example, if the trend is up and prices pullbacks into a support level, that can be a great buying area. If the trend is down and price rallies into a resistance level, that can be a potential selling area. These levels give you trading structure and help you avoid random entries. The best opportunities for beginners happen when the trend, along with support and resistance levels, come together. For example, this chart of gold shows that the market is in an uptrend. And see how the price makes higher highs and higher lows. After the price reached this level, it pulls back into this clean support level right here. At this point, you are not guessing. You are trading with the trend because this is the level where the market has reacted here. Same thing in a downtrend. Here is the market moving down, forming these lower lows and lower highs. If the market retraces back up into this resistance, the momentum is still down, but that's a clean, simple sell zone. You don't need 10 or 20 indicators, just trends and levels. And always remember, markets reward patience. You don't need to trade every candlestick. You simply wait for the market to come to your levels, either support or resistance. That's the best way to avoid emotional trading. So now you understand the basics. Follow important news, identifying the trend, use support and resistance, and combine these elements for higher quality entries. These are simple concepts, but they are enough for beginners to start trading the market with confidence. If you are ready to take the next step, start practicing these ideas on real charts. Click the link below to get started today and start your trading journey.